Hi, everybody, and welcome to the latest episode of our Geostrategy in Action video series. I'm Oly Jones, EY's Global Geostrategic Business Group's leader. It's good to be with you all again. And today I'm joined by Famke Krumbmüller, who leads all our activities in EMEA. And we're going to focus today on Europe. Europe, the continent, not necessarily just the European Union, I would note. And we're going to discuss how Europe sees the world at the moment and also how European-based businesses are seeing the world too. So Famke, welcome to the series.
Thanks, Ollie.
No problem. So people will be really familiar with what's happening, particularly at the moment with tariffs and the US administration's approach to tariffs, and that there are differential approaches being taken to different countries, and European Union as a sort of single trading entity is being sort of treated essentially as a single country for these kind of tariff purposes. And people will be familiar with the sort of baseline 10% and a higher level of reciprocal tariffs, which are now suspended for 90 days or so, according to the latest announcements. But so I don't think we need to kind of repeat what's happened over the last few weeks. What I'd like to spend a bit more time about, because I think it features less in the news, and I think it's really interesting, is how the EU is responding to the US moves on tariffs and other measures as well. So, Franca, maybe you can just start by just sort of giving your perspective on kind of how the EU is responding to what's happening.
Yeah, sure. So the EU has kind of telegraphed for a long time that they would take a very kind of measured, strategic, but at the same time firm response to any US tariff. So it's really this idea of the European Union and Europe does not want to be responsible for escalating the situation, but at the same time it will aim to defend itself. So what it has done now is it has already agreed a bunch of tariffs in response to the aluminium and steel tariffs from the US that are in place, but they have also suspended this. So the EU has suspended this response because it really wants to leave time for negotiation with the US administration. Um, the challenge right now, in my understanding and what we're hearing, is that there's not much engagement from the US side right now. It seems to be difficult to negotiate at this stage, but so the EU is clearly leaving that door open and is hoping that over the next 90 days or a little bit less at this stage, some type of agreement can be reached. They've offered zero tariffs on industrial goods and are clearly signaling that they want to discuss.
I think that's really interesting. That very last point, people don't often pick up on, but the offer of kind of 0% tariff on industrial goods. I mean, in many ways, there would be a real step forward if that ended up as part of any agreement. So I think it is worth watching that the process of trying to reach agreement that's going to happen between the European Union and the US, but between lots of countries in the US. We don't know exactly where it may end up, and in some cases, it may end up with a trade liberalizing impact as well. And so I think that is worth sort of people thinking about. And whilst that's not the guaranteed outcome by any means, I think it's interesting that kind of offer has been made to be kind of 0% tariffs, kind of presumably both ways. I think that's really interesting. It's worth just adding, we promised not to just talk about just the European Union. So obviously there's other countries in Europe outside the European Union framework and trading framework. And so I'm based here in London, as folk know, and the UK is in some ways a similar position, seeking to negotiate and agree a kind of some sort of deal with the US administration. I suspect the UK is further along those lines. There seems to be a relatively open channel of communication between the UK and US governments, and talk of some sort of trade deal. I don't think it was likely to be a kind of traditional trade deal with lots and lots of detail around lines and tariff codes and those kind of things. But I think there's a there seems to be a prospect of some sort of trade deal, and that's made easier by the nature of the trading relationship between the UK and the US, and the relative balance between the balance of trade as well. And so, I think it's European Union clearly economically is a very large body, and what happens between the EU and the US matters for lots of other countries too. But it's interesting to talk about other countries in the kind of European continental area. Panko, one of the things that we often talk about is that yes, at the moment, this tariff situation is consuming a lot of people's minds and attention and so on. But there's also an awful lot of other things going on in the kind of wider geopolitical space. So perhaps I could ask you to talk from your position about what else is in the minds of European leaders and in the minds of European businesses, I guess, too. What should businesses be thinking about?
Yeah, sure. And I actually quickly, before I answer that question, want to pick up on something that you said before in terms of the UK has a more balanced trade relationship with the US. I think this is a very important point because I don't think we talk enough about the trade in services between now the European Union specifically and the US, because here there's actually a trade deficit of almost 110 billion for the EU. And that's also where then in the future, should the negotiations not yield any results and not be constructive, that's where I think the EU might then take action. So I think just worth keeping that services angle in mind. Um, to get to your question in terms of what else is going on, a lot of things are going on. And I think, especially from a business perspective, it's super important to keep in mind that it's not just about tariffs. I think there's a much broader and more structural questions in Europe right now about the future of the transatlantic relationship, because clearly what has happened over the last couple of weeks just highlighted that something fundamental has changed and that Europe does need to take actions to become more independent. Commission President von der Leyen just said the West as we knew it no longer exists. I think that's quite a telling thing to say. So there's a lot of movement in Europe around, okay, what does this mean? So we will see more spending on defense, for example. We see, because there's a new German chancellor almost now elected at the beginning of May, who will be in place, that has a better relationship with France. The Franco-German relationship is back. The UK is also playing a much bigger role now. So we see all of these kind of signposts pointing towards action on Europe to maybe integrate further on certain aspects, single market, things like that, that have potentially very positive consequences for the business environment in Europe. So there's a whole conversation there about what that will look like. And then I think the other very important topic to think about will be the EU-China relationship, for example. A lot of questions around what happens with regards to the China-US relationship and the consequences on the EU-China relationship, both in terms of, for example, Chinese goods that cannot go to the US anymore that might flood the European market. There's a worry there. But at the same time, I also think Europe will be less willing to be kind of bullish on China. So I think that's an important one to watch. To just point out too, I can go on for some time, but curious to hear what you think.
Yeah, look, I think the high level point that I would make is that there's lots of different influences and factors affecting the mindset of European governments and therefore impacting upon European businesses as well. And so you've listed a number of things, but for instance, the EU omnibus bill around sustainability legislation is kind of really quite impactful and tells you something about the underlying sort of forces and the underlying kind of drivers of change in the EU. Are also there's plenty of underlying drivers that are kind of embedded in European Union countries in terms of attitudes to regulation, a sense of perhaps we've become, the European Union in particular, but European countries more generally, but maybe become over-regulated. The drive towards needing kind of a more productive economy, stronger industries, and those kind of things. I think Europe was already changing. I think in terms of its mindset, and I think the kind of the tariff negotiations that are now ongoing with the Trump administration, add to that change. But I think there's more than just the impact of the tariff negotiations. There was already a kind of endogenous change happening within Europe as well towards a slightly different sort of balancing of policy priorities, which I think is kind of really important for people to understand that it's a very broad base of change happening within the European Union at the moment. So we ought to talk a little bit about what this means for business, right, and for other organisations too. And so, Famke, I know that you speaking to different businesses and from various different European countries, most days. Give us a little bit of sense of what you're seeing, and then I can add some perspectives from my sense too.
Yeah, sure. So obviously, I mean, there is a lot of questions around the unpredictability of the U.S. tariff policy, which is creating huge amounts of uncertainty. Um, what I sense is two types of conversations. One around what I would call the crisis management around these tariffs and what to do about that, how to anticipate, how to understand how a business might be impacted. Um, we've seen short-term measures being taken, such as stockpiling. There's interesting data out of Ireland now that shows that, for example, Irish exports to the US increased by 200% in February. So it shows you that businesses are taking measures to stockpile products in the US um, and to try and deal in the short term with these tariffs that are so kind of uncertain and fluid. Um, and then there's a second more structural and medium to longer term discussion around what does this, but also other more structural geopolitical trends mean for supply chains. And so that's where a lot of the conversations are going um, around what can be done around supply chains. How can we separate the noise from the structural signal and integrate this into our supply chain strategy? And I sense that here there are different discussion depending on what sector you're speaking to, because some of the more strategic sectors, as we think about it, um, are in any case, and this is also predates the tariff conversation, thinking about how to adapt their supply chains. Those are the two big things that I'm kind of hearing and talking about. What are you talking about with clients?
Yeah, like I think it's a relatively similar story, which is perhaps no surprise. I think, and that difference between sort of some of the short term measures that need to be taken, and then thinking through what the medium and longer term looks like. So just to double click down on the short term measures, I mean, you mentioned your Irish example. We've actually got some research coming out in the next couple of weeks about how companies have been responding to changes in tariff levels, and in fact, this is quite a long term piece of research. So it's not just some of the latest tariff from the Trump administration. It's a much wider set of questions, and it's interesting to see that people often at around sort of 40% of companies are looking at domestic alternatives, are looking to sort of innovate in their kind of products to reduce the amount of tariff materials in products. That was another thing that's come out, and then obviously doing things like absorbing costs or passing the costs on. And so there are various different strategies that companies are employing depending on the markets they're in, the changes in tariffs that they're seeing, and so on and so forth. So I think you're right. There's that sort of short term, more tactical kind of changes, and then there's a different conversation, which is what does this mean for the medium and longer term? And you put it really nicely. This is where talking about the structural signals is really important, I think, and trying to escape the kind of the noisiness and the uncertainty that comes with the current situation, but also to reflect the fact that there is an ongoing settlement. It's a very large number of ongoing negotiations around the tariff situation at the moment, and clearly that brings uncertainty as to where this ends up. So it's difficult to take decisions in that environment. I think the one other thing I would say is that a lot of our conversations also go to both the balance of risk and opportunity here, and this is a point about for European companies, Europe as the continent, but it's true for US companies, European companies, companies in Asia Pac, etc., etc. I mean, all companies this applies to. It's not just a European point, but there are risks and there are opportunities in this space too. And I think particularly if you're having that conversation about the structural signals, we know that those are here to stay. Many of them have roots 10, 15 years ago. They're here to stay. The world has changed, is a little bit different. And so this can no longer simply be a risk management exercise until things sort of somehow go away. I think those trends are here. And therefore, yes, some of this is risk management, but in a sense, more importantly, it's okay, how do I continue to grow? How do I continue to invest? What are my best investment decisions going forward? And so I think getting the right balance between risk conversation and an opportunity conversation is another quite sort of optimistic theme, I think, in the discussions that we're having. And that's probably not a bad place to end this episode thing. So hopefully people have enjoyed being able to just double click onto a kind of what is a kind of quite a careful and considered European response to the immediate negotiation essentially with the US administration around tariffs, but also an understanding that there's a lot more going on in Europe too, and it's not just that one issue. and of course that businesses are having to kind of react. And I like the way we put this, which is there's a sort of short-term tactical set of conversations and a medium and longer term structural set of conversations, and separating those two is a really good step to thinking about how businesses can be kind of thriving in this complicated and uncertain environment. So Famke, thanks for joining this conversation today, and thanks to all our viewers for joining it too. So thank you,
Thanks, Oly.
and we look forward to seeing many of you again at the next episode. Take care, everybody. Bye bye.